Hello. So, video 2. This video is going to be titled, How do I enter the market? What is my criteria for entering the market? A saying I was told way before I started trading: if you fail to plan, you plan to fail. If you do not have a trading plan, you're going to fail. It's simple. So one of the questions I was asked by I wouldn't call it one of my friends. I was gonna say it's not student, it's not mentee, but yeah, one of my trading friends. He asked me, okay, so how do you enter the market in New York? Because I only really look for entries in the market in NY. Sometimes London, sometimes Asia. But once again, those have criteria as well. It's not just willy-nilly I will enter the market. Right, let's do it. Okay, so we have this week on gold. How do we enter this market in NY? So there's a couple of things I look for. Right, so first you have market structure to the downside. Alright, we don't trade Monday, we'll just go to Tuesday. Right. Okay, so how are we getting involved in this move? So the first thing we need to understand about the market is, where is our area of value? Right, my area of value is a institutional candle. Not too sure if ICT likes it to be called that, but institutional candle. So this is either going to be a last up or a last down close candle. What is they now? Every single one of these concepts, they have a rule. So the rule to either having a last up if you're bearish or a last down if you're bullish is it has to beat a short-term high and then run the range the previous side. What do I mean? There's the short-term high that was beaten, and then we ran the range the previous side. Perfect. So how are we getting involved in this move? Okay, we've got our fair value gap here. This is London close, isn't it? On a Monday. And that gave us our last up close candle. Let me just remove this. Cool. So that gave us our last up close candle there. So we're just going to mark that out. Low. And 50%. Okay, so 100% and 50%. Those are our 2 points where we would look for price to come back to, right? On the Tuesday, you then have this lovely fair value gap here. And you have, like I said, you have this institutional candle, this last up close candle here. How are we then getting involved in this market? Right, let's zoom in. So we need to understand what London done, what Asia done previously to that, and then we'll get closer to it. Alright, cool. So I mean, it's got a different chart, you know, because the kill zones don't show up on this chart correctly, which is brilliant. Alright, cool. So Tuesday, here's our last up close candle. See how it looks different on each time frame, but the same principle applies. I can do it from here, mate. It does not matter. It does not matter. Okay, so now we're on the 30-minute. We was on the hourly. It's the same. It's the same thing, man. Like it doesn't change. And you have two imbalances here, or SIBIs: sell side imbalance, buy side inefficiency. Right. Right here. And look how we respect the bodies. How the bodies respect them. Go on a lower time frame. Where would I enter the market from? I trade the market based on time. Okay. So you have Asia, you have London, you have New York. What did Asia do? Asia made a lovely range, beautiful range. Accumulation. Right? What did London do? We did not close beneath this low. We whipped beneath this low on every single time frame, literally. But it's still a last stop close candle, meaning this low is our target, our final target. Right? This is the manipulation. Right here. All of this is manipulation. All of it. Okay? I like to enter right here, between 3 and probably about 5:30, to be honest with you. And this is where you enter the market. Now, I like to see all short-term highs get taken, so I mean everything, right? You got these highs here. I want to see everything get taken. These highs here. Right? Okay, so you got these highs here. Oh. Mate, they're all highs. Look, all these highs, they need to get ran. Anyone who was selling, yeah, they need to get ran out. They're inducing sellers. They want to get early sellers in the market, run them out, and then take price the correct way. We want to wait for these sellers to get taken out, right? I want to see a liquidity raid. Liquidity raid into what? Into a fair value gap or an institutional candle. Preferably both. Preferably both. To be fair. No, both. Right. Don't try and trade one without the other. This works. Trust me. Here's your entry. 15 pips. Stop. And to me, that's big. You will see. Previous low. You know what? We won't even take it to the previous low. We'll just take it to the PD array, because that's a bit too much. We'll take it to the fair value gap right here. That's our first target. This buy side imbalance, sell side inefficiency, busy. Right? That's the first target right there. Right? These first target, second target right here. And we can do this another day. Like, we can keep going. Alright, cool. So let me just delete this. This is my new last up close candle right here. This is my new last up close candle right here. Once we've taken this low, that only happens here, right? Which is why I can't take this sell. Nope. But what do we have? Between Asia and London, you have accumulation, then you have manipulation. Look, Let's go on a higher time frame, you'll see it. And what you want to see are contracting candles. You want to see candles that are, you should probably see one better on the hourly. You want to see candles that have decent sized wicks, right? But the bodies are small. Look at that. Accumulation, manipulation. You can see it right there on the hourly. Fair value gap. I don't have to draw it out, mate. It's when you see it, you can't unsee it. As Mr. Michael would say. Once you see it, you can't unsee it. Look at that. Fair value gap. Breaker structure. Ran Asia low. More equal lows. Retracement. Fair value gap. Trade. $15 stop. Like I said, to me that's kind of big, but you know, where we going? Previous low. Right here. And you can do this. Look, we're trading the exact same time of day, right? Right within that New York kill zone, that red bit on my chart. And the same thing's happening every single day. Let's go to, mate, same thing. Like it's, and ICT will call these your OTEs, your order flow drills. Optimal trade entry drills, I should have said. But we digress. Look, this fair value gap right here. Mate, it's... Now, obviously, this is all hindsight, right? This is all hindsight, right? Of course. But this, once you understand this, these last institutional candle, right? Once you understand all of these things, mate, trading becomes a lot easier. Being in trades can still be hard, and that has another element of like your psychology, but mate, it's right here. You can see it. 50%. You could have just you didn't even have to try and get a tight stop. I get tight stop losses because I do other things, which you will see if you want to watch a live video. But this is how you trade consistently. This is how you do it. Right. Okay, so 3 things required. What do I look for before I enter the market? I'm looking for AMD, power of 3, accumulation, manipulation, and I want to trade that distribution. I'm looking for, essentially it's a traffic light, right? It's a traffic light. Red, you don't want to do anything. That's your accumulation. Market is engineering liquidity. Amber, you maybe should be looking at it, right? You should be looking at it now. Getting ready, right? If you've ever driven a car in most countries in the world, I hope you have traffic lights. If not, damn, you're having some road accidents, man. But green, you can go. Accelerator, push that button, right? What's going to show you that it's green? The green is your entry criteria, which means you should have had a fair value gap being filled. You should have had a institutional candle being mitigated. Mitigation block, propulsion block. Boom. Okay. Hopefully this video was helpful. I wish someone just made it easy for me, mate. Damn. It's not hard. It's not hard, mate. But there you go. I guess gaining the skill is hard. But yeah. Might make a traffic light video next. You never know. Till the next time, signing out. P Major, Paul. Take care.